بدأت
شاكر
انت اللي
شاكر يا اخوان
انت اللي بدأت
لا يا
انت اللي بدأت
يا سامر لا لا
All right, I've told you guys in the last couple videos that it was all going to come down to the week that we were in, the week the Fed cut, and then the next week, because here's how the markets work. They always have an initial move, but then it has to get confirmed. And so what was the move after a 50 basis point rate cut? We had a surge in the S&P 500, and we went above 570 and made an absolute all-time high. But now this week, the markets have to confirm that. And I'm going to take you into the SPY because I think the SPY is giving us clear direction right now. And I'm going to give you guys the line in the sand. If we get beneath it, it means that the floor has fallen out from beneath the market. If we get above it, it means that we are simply going higher. Now, I'm going to remind you guys why my number one discipline, my first discipline, is to trade the trend, because there's this massive battle between the bulls and the bears, and people are already trying to align with one camp or the other. But the question is, are they aligning with the right camp? What's the right camp? Do we know what the right camp is? Do we know who's winning right now? It's the bulls. The trend is bullish. We just hit last week an all-time high. And so there's no way that any bear could come along and tell us that it's time to get bearish on these markets after last week we hit an all-time high. But this week, we're going to be looking for a continuation on that move, as well as three things I'm going to be watching for. I'm going to lay out for you guys what you need to be aware of that's happening this week, the fresh data that will move the market. I'm going to lay out those data points for you. And we've got two companies that are reporting earnings, and both of them are pretty hot plays. I'm going to share with you guys what you need to be watching this week. We're going to go over the SPY and we're going to go over Bitcoin, because Bitcoin did something very similar to the SPY. They both set up the exact same way. And I'm going to show you guys those setups. This is the Stocks with Josh show. Thank you for joining me today. I appreciate each and every one of you guys. Hit the like, drop a heart, say hi in the comment. Always watch out for scammers, both in the comments and in the Discord. They'll be the first people to contact you and reply to you in the comment section. It's not me. They'll use my picture. They'll use my name. Same in the Discord. You join the Discord and it seems like I'm reaching right out to you to welcome you. It's not me. I'll never reach out to you in the Discord. And most specifically, if you think you're engaging me and you're like, oh man, Josh is great, he's so nice. Guys, I'm never going to reach out to you and ask you for money. Never. I'm never going to extend a new and exciting trade opportunity for you. I'm giving it to you today. I've delivered and I'm delivering the alpha to you in this video so that you could become your own chart goat master. That's what the Stocks with Josh Discord is about. It's the Chart Goat University. And on that point, we started a 3K to 10K challenge last week. And I'll just go over the trades that we've had. We've had two trades so far. The first trade was a 110% win. And the second trade was a 70% win. Now, those are great numbers on the first two trades, and I'm super happy about it. But I'm going to give you guys a warning that I can foresee. I bet you that there's someone out there who missed the first trade at 110%, and then they didn't follow me on the second trade for 70%. And they now are going to say, well, the next trade Josh drops, I'm going all in, baby, because he's killing it. And then they don't account for the fact as to why I started this 3K to 10K challenge with defined risk and following my disciplines, because I'm accounting for loss. I'm not expecting each and every trade is going to be a winner. And so if the third trade is the one that doesn't happen to be a winner, and that's the one that you also decide not to follow the rules on, and that one is not the banger that the first two would be, then you get really, really discouraged. Guys, the point of this trade setup, 3K to 10K challenge, is to really learn how to employ the disciplines to be a better trader. What are the disciplines? We're going to trade the trend. How did I lead in this video? The trend is up. So we're going to be looking for powerful moves to the upside. We're not going to try to second guess the market. We're going to be looking for trade setups that go long this week. I'm not going to be looking for puts. It doesn't mean that I'll never take a put. It means that the best winners are going to be the trades that go with the trend. Number two, we're going to use a stop loss. How are we going to do that? Well, we have a defined risk for each and every $300 that we put to work. We're actually going to accept a very high loss rate, which is 30%. But we're going for 60% wins. And so if we win more than we lose, we're going to grow that small account. All right. And then the third discipline that I employ each and every day is controlling position size. Most people are going to get wrecked because they're simply going in too heavy, too hard, and they're not spreading risk across more than one trade. And then the last one is not to overtrade or revenge trade. So here's what could happen. You missed trade 1, you missed trade 2, you went all in on trade 3, then you throw some more money in your account and you say, well, I've got to do something to get it all back. And then you revenge trade and you could wipe out your account. I'm telling you guys, follow me to learn the disciplines. We're gonna make some money, but more important for you for the rest of your life is to learn how to control risk and learn how to grow an account and be a consistent trader. Because I'll tell you, the day that you become a consistent winner and you begin to understand your potential risk and your potential loss, I'm telling you, the lights will click on and it'll be such an exciting moment for you. In addition to that, in the Stocks with Josh Discord, and forgive me for making this a long overview of the Discord, but I do want to lay this out for you guys. I'm also teaching you how to trade the charts, how to get the right setups. And if you've got a plan, your plan's never going to work all the time. But if you stick to a trade setup plan, you'll find that you win more often. All right, let's talk a little bit about this market. Guys, hit that like and subscribe if you need help trading these markets. And just like those two guys at the beginning, the guy in the middle fighting between the bull market and the bear market, and you don't know where to stand, guys, join us, be in a community, and we'll do it together. All right, let's talk about exactly what is going on in these markets. First of all, I want to touch base on Bitcoin. And I want to remind you guys where we're at. And we're going to take a minute, we're going to look at the chart as well. But the fact is, we do have rising institutional interest greater than retail interest of previous bull cycles, and we are now slowly moving higher. I want to remind you that I called Bitcoin and all the alts a massive buy under the last dip under 54K. And I came out and I repeated it. And now we are slowly climbing. And when I take you into the chart, what you're going to see is that we had just gotten rejected at 62K, but now we've popped back above it. And what was once resistance may now operate as support, but we still have some barriers ahead of us. So it's going to be this week for us to see if we break beneath that 62K or we continue to climb. I'm leaning that the market is continuing bullish. Let's talk a little bit about the SPY. We surged 1.71% after the Fed gave us a 50 basis point rate cut. And that was higher and a hotter move than we got back in 2008. And that was an interesting news headline that the market responded similarly as it had with an up move that was greater than the up move back in 2008 when the Fed gave the cut back then. Well, that sent some alarm bells off in my mind, because if the move up was even hotter than it was in 2008, you guys know that in 2008, there was a huge, ultimately negative reaction where the market crashed and went down for well over a year. It was actually a hard time in the market. So that's why we've got to keep a very close watch on these trend lines to make sure that when the floor breaks, we know what's happening and not just imagining that the market isn't going to have a breakdown, because there will be a recession, there will be a pullback. But I will tell you that as of today, Sunday, going into this next week, it hasn't started just yet. But I'm going to show you in the SPY where that will begin. Okay, here's what you need to be watching for this week. This is what you absolutely need to have in focus. We've got the second quarter GDP coming out on Thursday, and that's going to tell us how strong the economy is. And if the economy, and here's what it all comes down to, if the economy shows that it's continuing to be strong, or that strength is increasing, and we're getting a dovish Fed who's cutting rates, the market will love it, and the markets will scream higher. Okay, so Thursday will be a big day for the markets. And then Friday, we've got the PCE inflation index, which is expected to drop to 2.3% year over year from 2.5%. And so the perfect move for these markets would be Thursday, the economy shows strength, and Friday, inflation comes down. And I can tell you that we would rip so hard on Friday going into the weekend that it would just absolutely shock people. Okay, now putting that into consideration, the market might wait for that data to really load the boat on Friday or even Thursday in anticipation of that information. And we might have a little bit of a struggle Monday and Tuesday and Wednesday. Now, I don't know. All I know for a fact is if the data comes out the way that I just described, by Friday, we will be ripping higher. So we got to keep a close eye on what trend lines we stay above or which ones we break, because it absolutely is going to tell the story. The end of next week is going to confirm the up move or establish the beginning of the down move. So let's go quickly check out the SPY, and I'm gonna show you what we're watching out for there. All right, guys, we obviously had this area here from around 563 all the way up to 565 work as an area of resistance. We repeatedly moved a little bit higher each time, and the market, though, kept getting pushed back on this slightly ascending line of resistance, right? Until eventually last week, we had this powerful move and we broke out above it, right? It had hit a number of times. Now we've come back and we've hit this area. And what usually happens is when something works as resistance, it then gets tested as support. And if we then take off from there, this is absolutely pointing to a market that's getting ready to go on an explosive move. But here's the lines in the sand that you need to be keeping an eye on, because if we break beneath 564, then that is confirming a down move. Now, it's not crossing that price line. The first step would be to cross that price line. The second step would be to open and close a candle beneath it. Then we definitely want to be bearish, and we want to acknowledge that something has shifted and something has pivoted. And alternatively to that, back above 570 means that the bulls have won and the market's going to scream higher. All right, the last thing I want you guys to be watching out for, because I'm going to be covering it in my next video, is two companies that are reporting earnings this week. One is Micron, the other one, which is a chip maker, and they're obviously going to have a big impact on the rest of the chip stocks, including NVIDIA, and I'm watching for some calls on NVIDIA. I want to go long for an explosive move on NVIDIA, but I need the charts to kind of point to me that they want to break out, and it could be in sympathy with some bullish earnings from Micron. In addition to that, we're going to be looking at Costco. Now, I talked about them because after the first rate cut, the best sectors to perform are consumer staples. And the pick that I like the most in consumer staples is Costco, ticker COST. And so I'm going to be talking about that in my next video. Don't miss it. Hit the like and the subscribe and the all notification bell so you can get those calls, because we will be trading them this week. We'll be watching those companies. I might not trade Micron. I might just choose NVIDIA, but we're going to be looking at how they perform, guys. Don't miss out. Come check out the Chart Goat University, and specifically the education piece there, because that's the part that's going to change your life. Yes, there's going to be hot plays, but you figuring out how you can become your greatest of all time at the Chart Goat University is what's really going to change your lives, folks. Okay, I appreciate you joining me. We'll talk to you soon. Peace and blessings. Take care.